and then perhaps 90, 95 odd levels, which the stock had seen as previous highs. So a very clear hold on this one. Positional stop loss comes in just below that 50 mark, where the stock had made a recent low and taken support. So maybe 58 can be a positional stop if at all you want one.
All right, so that's the view coming in on NMDC. The next counter that we're talking about is Jammu and Kashmir Bank. Ravi Kumar from Hyderabad is holding 350 odd shares at an average price of 114 a piece, and he has purchased this during the last 8 months. He wants to know whether he should hold it for some time or add some more shares at the present lower price or book a loss. He is ready to hold this for 1 year is what he's saying. Mr. Choklingam, I'll come to you on this one. Jammu and Kashmir Bank, what's the view like for the next 1 year?
Definitely it is positive. A, the stock has corrected a lot, and B, its quality of asset is far better than many banks. And third, this is one of the few sectors to grow in double digit. Most broad sectors like FMCG, IT, cement, automobile, they are all growing in poor single digit. So the banking is one of the few sectors to continue to grow its business in double digit, and therefore J&K Bank would be a beneficiary. Lastly, we are seeing a lot of economic activities focused on J&K state, and that also should be positive for the bank. So therefore, I would give a buy recommendation from my research perspective on J&K Bank.
A buy recommendation on J&K Bank, and I would hazard a guess, Mr. Choklingam, despite the correction, and we've spoken multiple times, I think, over the last 1 year, I must give you credit when we were asking you questions about 8 months back and you were looking at valuations. I remember very clearly that you said nothing is looking attractive. And so, rightly so, because you saw the correction in valuations that take place, and kudos to you for calling that out. So I'm glad that you're now giving some buy recommendations. That bodes well, I think, for our viewers tuning in as well. Easy Trip Planners, we've got a viewer that is asking, Manu from Bengaluru is asking about this. He's bought at levels of 16.6. The stock is currently at 12.25, and a lot of people are bottom fishing here. The question is, would you hold or add more at this juncture? Kush, what's the view?
Well, definitely not add. I mean, we've all known what all's transpired with the stock and kind of fall that it has seen. It's now starting to just see some sort of time consolidation. There isn't anything to support, a positive up move, or at least a big one at that. Now, since his buying price is 16, I'm not saying the stock's very close to it, but if you put it in context, that the stock actually fell from about 28 odd levels. Some recovery is underway. He could continue to hold on to this one. However, I would suggest a stop loss at 10. If that is breached, then you must exit this stock. But yeah, continue to hold on. It might take some time. Start exiting closer to 14.5 and 16. You're closer to your buy price. Not hoping for a big profit in this one, but some consolidation underway. Could see some better days.
That's the view coming in on Easy Trip, and hold is the view coming in from Kush. Yash is writing in from Gurgaon, and he's holding 220 shares of Elecon Engineering, bought at 5 and 6 a piece. He wants to hold this for the next 2 to 3 years, and he wants to know whether this company is good fundamentally or not, is his question. I'll come to you, Mr. Choklingam, your view with respect to Elecon Engineering.
Yeah, it's a quite decent company. Also, stock has fallen a lot. So I would give a hold recommendation. In case it falls 5-10%, then it can be a good buy as well. Okay,
so good buy as well. If you said, Mr. Choklingam, did you give a target for that?
No, but definitely, even from current level, around 10% is possible. Okay. Somewhere around 500 is possible.
Okay, so that's the view with respect to Elecon Engineering. We have our next caller. Gulzar is calling in from Maharashtra. Gulzar, a very good morning to you. How can we help you?
Yeah, very good morning. Very good morning. Very good morning.
Go ahead with your query, Gulzar.
My query is about Sterlite Sterlite Technologies, 2,000 shares at 140.
Okay.
So can you give me some suggestion? We should hold or sell? Or we can do we can vote more on that. We can average something like that.
Okay, so did you see the charts while buying this counter, or did you check the fundamentals of the company?
When I bought, it was a fundamental, and it was a good recommendation from one of our broker.
Okay.
And it was the best fundamental. I mean, the news was good, but suddenly I don't know, the market is falling down and the price is coming down.
Okay. All right, got your query, Gulzar. I'll go to Mr. Chokalingam. Mr. Chokalingam, your view with respect to something like a Sterlite Tech.
Yeah, unfortunately, this stock is always highly volatile, not only in terms of stock price, also in terms of the fundamentals. So my humble suggestion is that, even if you get tip from a person like me, you always do some basic health checkup. Why I'm saying is that if you look at, the performance, it's quite extraordinarily fluctuating, and the last year it has posted losses as well. So this kind of business always see a structural trend of realization for the end products keep going down or sometimes extremely volatile. So I would say that since stock price also crashed a lot, tactically one can hold and hope for some recovery, because that also happened in the last 10 years. Whenever it got crashed, it also gave a good recovery. So therefore, not from fundamental point of view, I would say tactical perspective, one can hold a Sterlite Technologies.
Okay, all right. From a tactical perspective, hold on is a view on Sterlite Tech, though it's seen a sharp correction over the course of the last 6 months, in fact 3 months on the charts. We've got Axis Bank that we're talking about next, and Subhadeep has got this stock in cash, and he's also got an option strategy that he's trying to implement. I do not have the details, Kush, of the option strategy, but he's losing in that strategy. He's got Axis in cash at 1,100 levels. He's got 509 shares. So can you give him some perspective on the trajectory that you see the stock taking in the near to medium term?
Sure. If you see on a daily basis for the last 5 sessions, the stock's making a lower high, which suggests that it has been under pressure for some time. That is why if you rank it, in the private banking space from a momentum perspective, then it will rank fourth, after the likes of ICICI, HDFC, Kotak, and then, HDFC Bank, because even in a rally where the financials are doing well, this stock isn't really participating with all the gusto. However, since his buy price is not too far off, about 1,100 or so, it's not a bad idea to continue to hold on to this one and exit at cost, or maybe at a mild, at a mild profit. Support zone comes in at 1055. On the way up, the stock could face resistance around the 1110 mark, and once that is taken out, 1140 mark. The momentum is missing on this one, so I would suggest an early exit, perhaps at cost or maybe in minor profit.
Just to follow up, in case you have a view on this strategy, he's got one lot of the 24th April call at a strike of 1,120, and so he's incurring a loss at this stage. What would you do with that trade?
What's the price of that option, Alex? That he bought it at?
The price that he bought is 17.31.
Yeah, no, I would suggest an exit on that one. The 1100 call, as he can see on his option chain timeline as well, is is seeing a very heavy congestion. So the 1100 strike will act as a bit of a resistance. If you do get that breakout, then as I said, 1110, 1140, these are some of the levels which will start acting as a near-term, resistance. While the financial services space is doing well, this stock hasn't participated. Not a bad idea to exit right now, rather than incur, more losses, as time decay more than anything else.
Okay, so that's the view with respect to Axis Bank and the call option as well. Our next caller, Shankar, is calling in from Chennai. Shankar, a very good morning to you. How can we help you?
Very good morning.
Good morning. Go ahead with your query, Shankar.
I want to know, Gail and Gail is the right time to stop for my portfolio.
Okay, got your query, Shankar. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, he wants to know whether this is the right time to buy Gail or SAIL shares. What's the outlook like? Or both?
I believe it's possibly ideal time to buy Gail, not SAIL.
Okay.
The global deflationary conditions are emerging thanks to tariff war. Indian steel demand also slightly slowing down. So that will be negative for SAIL. But Gail, after the steep correction, it's very attractive, single-digit PE. But its business outlook is far superior to steel industry. And also Gail is getting into petrochem business in a significant way. All this would augur well for Gail.
Okay, fair point. Mr. Chokalingam, I'm coming back to you on Maruti Suzuki, specifically on today's tariff announcement. Dasarathy, who's writing in from Vijayawada, wants to know whether there's any impact on Maruti Suzuki. At least from our perspective, that doesn't seem to be, because as we all know, it is India's largest four-wheeler manufacturer, and primarily focused on the Indian market, though exports have been going up in the recent past, not to the US. So he's actually bought at levels of 1,965, which is impressive in and of itself. So he's sitting on a substantial gain. Should he hold on?
I would suggest that one can sell Maruti and shift to M&M. You are absolutely right. It's got at least exposure to, or nil exposure to perhaps to US market. The point is that the domestic automobile sales have slowed down. Unfortunately, even the automobile business has joined what I call single-digit growth syndrome in terms of volume term. So therefore, I prefer M&M because the SUV growth was driving companies like Maruti in terms of overall growth, but that has slowed down for Maruti. But M&M is still doing phenomenally well, and it's also diversified in practice, which is making a lot of money. So therefore, in automobile space, also based on the last 2 months of monthly sales volume, I prefer M&M to Maruti as well as to Hyundai.
Okay, prefers M&M as compared to Maruti Suzuki is the view coming in from Mr. Chokalingam. Our next caller, Sunil, is calling in from Mumbai. Sunil, a very good morning to you. How can we help you?
Good morning, ma'am. Good morning to everyone in the studio. Thank you so much for taking my call.
Our pleasure, Sunil.
My query is with a stock called Syrma SGS.
Okay.
I bought about 1,275 units at the average price of 542 rupees.
All right.
I have net loss of about 88,000 as of today. My investment horizon is long term.
Okay.
I can wait for the next 1 to 2 years.
All right.
I don't mind. But I just want to know, it's a fundamental question, how does this company look? What are the long-term perspectives? Shall I continue to hold on to the stock or sell some? So if you can help, that'll be really nice. Thank you.
Sunil, I don't want to compliment you on the clarity of your question. You speak very well.
Thank you. Thank you so much.
You can visit us in the studio if you want, and we can.
I would love that.
All right.
Thank you so much. Thank you.
Let me go across to Mr. Chokalingam on this one. Syrma SGS, bought at levels of 542. The question is pretty clear. Would you hold for a period of 1 to 2 years?
Yes, perhaps one can, because valuation is extremely stretched, but the stock also has fallen. But I would give a hold call because the growth has been quite impressive. And therefore, for 1 to 3 years perspective, one can hold Syrma SGS.
Okay, hold is the view coming in on Syrma SGS. All right, our next counter is Wonderla Holidays. Aniket is writing in and wants to know the entry price for this particular counter. Kush, I'll come to you on this one. What are the charts indicating for Wonderla? Is this the right time to enter?
Yeah, not a bad time to start accumulating. I wouldn't say go all out and buy. The reason is that the stocks definitely moved higher from the lows of 590 or thereabouts, but it's now facing resistance at the 685 mark. So you could start accumulating this one at the current price also, maybe about 50% or so. But once the stock crosses 685, that's when this ascending triangle resistance will be broken and the stock would gain momentum and heads towards the 730 mark. So yes, this is a good time to start accumulating, but I would stagger it 50% now, 50% after the 685 threshold is taken out. And on the downside, stop loss comes in at the 640 level.
Okay. All right. So that's the view on Wonderla Holidays. Seasonal play is what a lot of people call it. Unicommerce e-Solutions, it's a 1,300 crore market capitalization company, recent listing, and it is in the e-commerce space. Sohail from Jaipur has bought at an average price of 146, which is not too far from the current market price of 130 or thereabouts, but he's bought a significant quantity, Mr. Chokalingam. Do you have a view on this, first of all, and would you hold for a period of 2 to 3 years?
Unfortunately, I have not tracked this company, so I may go wrong if I give my view.
Okay. So let's avoid doing that then. And Sohail, forgive us for not giving you a specific view, because we don't want to give you, or I'm sure Mr. Chokalingam does not want to give you advice that can be to your detriment. We've got Subramaniam Kothagodam from Telangana who's writing in, and he's got JSW Holdings, which he's been holding at a buy price, if I'm not mistaken, or if he's not mistaken, of 5,000 rupees, 3 shares. The stock is currently at 25,772. Should he hold or exit? Any view on this one, Mr. Choklingam?
Yeah, it has done phenomenally well. Now the holding discount also has come down. Normally, industry average holding discount is around 50 to 55%. I think it's a great opportunity to book profit in JSW Holdings.
Okay, so that's the view
But the
coming
only
in.
problem is the equity is very small and retail float is very low. So tactically, this kind of stocks can go to any level. So fundamentally sell, but the investors need to take his own decision whether to sell in a phased manner and try to capture the tactical opportunities which are possible.
Okay, the point is well made. And Kush, since there are only 3 shares, not too much in the way of tactics, but he's made a lot of money. So from that perspective, how should he plan and what levels would you say are appropriate?
I mean, even with those shares, it's a 75,000 rupee, holding
Yeah,
at the
nothing to
moment.
sneeze at.
Yeah, absolutely. My suggestion would be continue holding on to this one. It's a phenomenal buy. Kudos to him on holding on to this one. From the levels of 5,000 up until now. There are some minor, support zones that I could discuss. Predominantly one at the 22,750 mark. But other than that, it's got everything going for it right now. It's had a brief period of consolidation and rebounded from there. After a 3-month kind of a consolidation period. So it's got all going for it right now. I would suggest continue holding on. If at all you want to, then consider a trailing stop loss at 22,750. If that level is broken, it could perhaps see a medium-term downturn. But yeah, as I said, right now it's got all things going for it. From a technical standpoint, continue to hold.
All right. So continue to hold on the technical front. Fundamentals, as Mr. Choklingam said, you could book profits, but then tactically you should take a call. Senthil is calling us from Chennai. And Senthil, very good morning to you. I think you want to know about Radico Khaitan, and you've got a very attractive price. When did you buy this?
That is 3 years before, I
Wow.
could able to buy it up 3.5 years before. And I could able to track the stock which has been moving around somewhere around 5,200 to 5,500 for the last 6 months. It's been in a consolidated phase or something like that. I just want to understand whether I just want to keep it hold or should I book some profits or something. Is there any breakout is going to happen about 2.5 or 2.6 or something? I just want to understand.
Okay, so based on the question you're asking me, Senthil, I'm interpreting that to say that you want a technical view on this stock, right?
Correct. Should I hold it, or is it going to be a consolidation phase,
Yeah.
or is there be any breakup or breakdown or something like that?
Got it. Kush, what's the view on the charts? He's sitting on handsome profits at this stage. Should he take some money off the table?
I would suggest not, because while the stock did see correction in line with what's happened to the markets, the recovery has actually been much sharper, much faster. Right now, you're seeing a brief period of consolidation over the last 2 to 3 sessions, mind you, not any bit longer. So continue to hold. My suggestion would be continue to hold on to this one. Despite the kind of handsome profits that he's looking at, a trailing stop loss comes close to the 2250 mark. But to answer his very specific question, where are the resistance levels, and beyond what level do I see a breakout? That level is 2600. That's the recent swing high that it had made, and once past that, a rounding bottom formation resistance will come to an end, and that will be broken, beyond which the stock could actually accelerate further and move to levels of 2850, even 3000. What I would suggest is that because he's got this medium to long term kind of a time horizon and fairly decent position, he should actually continue with the idea of trailing stop losses rather than booking out early, or maybe even booking out partially. So continue to hold right now. Resistance at 2600, beyond which the stock could head to 2850 and 3000 levels also.
So hold is the view coming in on Radico Khaitan where charts are concerned. But with that, it's time to slip into a short break. But we'll be right back answering more queries on the other side. So stay tuned.
he sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screens right now. All right, moving on to the next query. Puneet from Gurgaon is writing in, and he's holding 700 shares of Balmer Lawrie, but at 257 a piece. He's sitting on a loss of around 46,000 rupees right now, and he wants to hold it for the next 3 months if the potential looks good. But in terms of technicals, and he wants a fundamental view as well. So I'll take a quick view with Mr. Chockalingam as well. But Kush, with respect to the charts, how are the charts faring for something like a Balmer Lawrie?
They're faring all right. I wouldn't say great shakes. The recovery is from the oversold territories, but now the stock is facing resistance around that 195 to 200 zone. Once past that, the stock could move higher towards the 215 mark. Not sure if it has enough steam from a 3 months time horizon to actually move higher, because on the days when the volumes have picked up, the stocks actually ended lower. So my suggestion would be to perhaps keep exiting at these intermediate levels, wait for 200, 215 levels to come about, and then start exiting gradually, especially if the view is 3 months. If you want to stop loss at the current juncture, then 175 is the level to watch for.
Okay, and quick fundamental view on this, Mr. Chockalingam?
Yeah, certainly. I've been tracking this stock for more than 2 decades and initiated, closed more than 3-4 times. Right now, again, we have a buy recommendation. Stock is down 40%, and which made a dividend yield very attractive. Cash-rich company, PSU, and it is more than 150-year-old company. There are rarely few companies in the country among all listed companies of over 4,000 to have an extraordinarily rich real estate assets associated with the logistic business. Not only that, it has got a JV, particularly one JV in UAE, which is making more than 100 crore profit every year, and that was started several decades ago. The real estate asset of that JV and the profitability is amazing, and expanding the logistic in Visakhapatnam. And so, considering all that, I believe the way it created wealth in the last 20 years, 3-4 times, once again it will create. I may be wrong. Because I also personally invested after recommending to my clients. Economics also hold the stock. This is one of the topmost high conviction stocks for us.
Right, so that's the view coming on Balmer Lawrie. Interestingly, charts don't look attractive right now because Kush has given a sell call, but fundamentally the company remains strong, which is why Mr. Chockalingam has given a buy call on the counter. Moving on, Benson is calling in from Mumbai. Benson, a very good morning to you. How can we help you?
Good morning to you all. My question is on transformers and rectifiers.
Okay.
I had purchased it at 396 last month.
All right.
Currently, I am in profit, but I just want to know, will it go upwards or is it right time to sell now?
Okay, so that's the view, that's the query on Trill. Kush, I'll take this up with you. What are the charts indicating for something like a transformers and rectifiers?
A fairly strong upward momentum. However, the last 1 week or so, the stock's been in consolidation, but that's all right. And it's moved higher from those 350 levels in a very short span of time. So some breather is absolutely, understandable. Now, it's got a gap near the 560 mark. That's the first level that, should come about and, could act as a speed bump more than a major resistance. So I would continue to hold on to this one. 560 is the first level. Once that is taken out, perhaps 610 as the next target. So for me, most of the stocks to do with the power sector are a hold or an add. In this case, since his buy price is so low and he's continuing to hold, I don't see a reason for him to sell. However, a trailing stop loss, starting from the 475 level should be considered. Every time the stock moves higher 3 to 5%, the stop loss can also be trailed upward.
Okay. All right. Let's talk about NCC because there's a question on WhatsApp and Sarvanan from Chennai is asking about this. He's bought at levels of 214 and he's looking for the 6-month time frame and whether or not he should sell at this juncture. Stock is at 213, very close to the buy price. So essentially he's asking whether to book out right now before he sees downside. Kush, what's the view?
No, I would suggest continue to hold. This is just consolidation, but that too with a positive bias. The relative strength is apparent because the markets were volatile and the stock has actually stood its ground in the last 3 to 4 sessions, very close to the buy price. So not a bad idea. I mean, if I were to initiate a view on this stock at the moment, it would be on the long side. So why not continue holding on to this one? 199, place that stop loss, around that mark. On the way up, the stock could see the first target as 230, and beyond that, you're looking at a 250. Also, I'm just rounding it off. So 230 and 250 are your targets on the upside. 199 is the stop loss. So very much continue holding on to NCC.
All right, so that's the view coming in on NCC. Our next caller, Ravi from Hyderabad, is calling in. Ravi, a very good morning to you. I believe you have a query on Vedanta.
Yeah, very good morning to all the guys.
Good morning, Ravi. Go ahead with your query.
Yeah, I just want to know whether it's time to buy Vedanta. Actually, I'm looking, it has a good amount of dividend and also it's demerging.
Right.
So will this have an impact on, Trump tariffs?
Right, okay. Got your query. Ravi, I'll take this up with Mr. Chokalingam. Chokalingam, I don't believe there will be an impact on Vedanta per se where Trump tariff is concerned. But what's the view like, outlook like? Is this the right time to enter the counter?
Hindustan Zinc is better than Vedanta in terms of the balance sheet quality as well as business model because Hindustan Zinc has got a silver business. Worldwide, that business is getting very high valuation multiples. And as I said, balance sheet is very strong. And today, the media also reported that Zinc has produced a record level of metals for December quarter. So all this would augur well for the Hindustan Zinc, and also in no way it is inferior to Vedanta in terms of dividend payout as well. And also the government stake is there, that also adds to a lot more on governance issue. So therefore, I have a buy recommendation on Hindustan Zinc.
Buy recommendation on Hindustan Zinc from the metal pack. All right, Mr. Chokalingam, one more question coming to you. This is on Lupin. And we've got Subramanian from Navi Mumbai who's asking about this. He's bought 40 shares in 2021 at a price of 954. Should he sell or hold at this juncture? He's holding at a decent profit.
Yeah. So that was the time we also had a coverage. We closed it later. And, but I would give a sell call on Lupin at the current price. It has played out from the bottom in the last three years. It has almost tripled, and also, little peculiar pharma company in terms of business as well as fundamentals. It fluctuates quite widely. Not only that, since stock also played out phenomenally well, I would, suggest looking at the FDC, which has got 82% of the business coming from the domestic markets. So I prefer at this juncture, although pharma is exempted, I am not very confident the earlier threat of 25% duty is absolutely cancelled forever, or it will revisit from the US policy. So therefore, I prefer FDC Limited to Lupin. I would give sell call on Lupin by FDC. Just as a disclosure, we have invested personally in FDC Limited.
And the point is well made. In fact, we have had other commentators, Mr. Chokalingam, today also voice a note of caution. Having said that, pharmaceutical companies themselves are saying that it's not so easy to shift supply chains. And any increase in tariff would essentially be passed on to the US consumer. And seemingly the exceptions that have been made to the tariffs are those that would very dramatically impact the US consumer. If you're talking about oil products, if you're talking about copper, if you're talking about pharmaceuticals. So perhaps let's see how that plays out. We've got Ekambraya calling us from Hyderabad. Hi sir, thanks so much for calling us. How can we help you today?
Yeah, good morning. See, I'm holding the
Tejas Networks shares at a rate of 1265.
Okay.
Now, I came to know from you people only, there is a heavy resistance at 850. Now it has already crossed the 850, it is moving towards the 900.
Yes.
Do you suggest me, is it the right time to average or accumulate?
That's a good question. That's a good question, and since it's moving on the upside, I don't think that Kush is going to take too much umbrage at the word average. Kush, what he's asking essentially is whether to add on to his position right now, considering that it has made its bottom seemingly and it is moving higher. It is in fact over 10% higher in trade today. What's the view on the upside?
I think a repeated masterclass on averaging is starting to stick, right? And not only in terms of, whether to average or not, but when to average also. And yes, I do agree with you. It's not a bad idea to start averaging this one because the stocks moved higher. I'll go back to that question. If I were to consider a fresh allocation towards Tejas, what would it be right now? And it would be on the long side. So yes, you could go ahead, add Tejas. I must also congratulate him on, reading the charts very well. 845, 850 indeed was, a medium-term resistance for the stock. It's broken that. And on the back of good volumes, it needed these kind of volumes and this kind of push for the stock to move, past that 850 resistance, and it has done now. Even on the weekly charts, if you see, it's making higher high, higher low formations for the last couple of weeks, and that's a very healthy sign. So from a positional standpoint, continue to hold on to this one. You could consider, averaging it as well, adding some more at the current level. However, I do see some resistances, around the 1,000 mark. And once past that, you're looking at the 200-day moving average close to the 1175 mark. So those are the levels that you might want to consider, perhaps going a little light. I know those prices are still below his buy price, but that's where you might want to start considering going slightly light on your positions. With the averaging, if it's 1:1, then your buy price will actually be significantly lower, and you might actually exit in profit.
So that's the view coming in on Tejas Networks, and averaging is a good idea in this counter as per what Kush has said. Moving on to the next query, Vijay wants a view on both IOC as well as ONGC at the current levels. Is it good to accumulate now is what he's asking. He's holding 356 units of IOC bought at 115 a piece and 222 units of ONGC bought at 234 a piece, and he's a long-term investor. Mr. Chokalingam, I'll come to you. One is an upstream company and one is a downstream company. What's the view like, and which one do you prefer?
I find it difficult to have a very solid long-term view on these stocks, because when oil price goes down, the gas price also goes down, and these kind of companies suffer. And when oil price and gas price go up also, they don't get a full benefit of higher realization. So I would prefer, stock like Coal India to IOC and ONGC. Coal India also has fallen a lot, and very high dividend yield it gives. And FY25, they missed out on growth, almost stagnating, but definitely FY26, they have to increase. The government is after them, because, otherwise you will have to spend billions of dollars for importing coal. And a lot of developments are also happening in the expansion of coal capacity. And this morning, we also saw that Coal India is evaluating acquiring lithium assets in Australia. That would be a big positive. So considering all that, I have a strong buy recommendation on Coal India, and I prefer to these oil and gas companies.
Very, very interesting call there, because we were talking about it just yesterday. The fact that the production numbers have actually declined in the month of March, and in fact for the full year they've missed their guidance and their revised downwards guidance as well. So point well made, Mr. Chokalingam. So watch out for Coal India on the fundamentals. We've got Ram Mohan calling us all the way from Dubai. Ram, thanks so much for calling us. How can we help you today?
Yeah, good morning. My question is regarding Caplin Point Labs.
Okay.
Which I bought it around 1,230, about 150 shares.
Okay.
And I'm holding it for more than almost a year now. More than a year. Should I continue to hold? My plan is to hold for another 3 to 5 years. And is it the right moment to add more?
Okay. All right. And what's the time frame that you have?
3 to 5 years.
Okay. Mr. Chokalingam is already sitting on a significant gain right now. What would you advise with regard to Caplin Point?
Yeah, the stock has played out in a very big way and slightly stretched. But definitely for 3 to 5 years, one can continue to hold because the management has delivered consistent growth over the last 10 years. It's amazing the way they created equity wealth for the public investors. And I believe they would continue to create, maybe not by the same scale how they've done it in the last 10 years, but definitely compared to the market, they will be able to create a better wealth over the next 5 to 10 years. So therefore, I would give a hold recommendation on Caplin Point.
Okay, hold is the view coming in on Caplin Point. The next query is on Zydus Life Sciences. Raghav from Ghaziabad is holding 100 odd shares bought at 1020 a piece, and he wants a view on this particular counter, and he wants a long-term view. So, Mr. Chockalingam, I'll come to you again. What's the view like on something like a Zydus Life Science?
Yeah, the Trump factor has been priced into a large extent, so definitely one can hold the Zydus Life for long term.
Okay, so that's the view coming in on Zydus Life Sciences. The next query is on Tata Motors. Yashoda from Bengaluru has purchased 10 shares bought at 650 a piece, and she wants to know as to what the charts are indicating for the counter. Kush, what are the charts saying for something like a Tata Motors?
Well, not all that encouraging. The only silver lining I can see is that the stock is above her buying price. If only by a very little margin. I would suggest an exit. On Tata Motors, if she wants to, she could consider something like M&M. But Tata Motors at the moment, is a very clear exit.
Tata Motors an exit. All right. Let me stick with the auto theme and ask about Hyundai. Or Hyundai, as it is called in Korea. Pradeep Rao is asking this question. He's bought at levels of 1,987, very elevated levels, and in fact the stock has not done well at all since the listing. He's writing in from Udupi in Karnataka. He's got 112 shares. He's wondering whether to hold or exit at this point. Since it's not been very long since the listing, I'm going to go to Mr. Chockalingam on the fundamentals. The numbers are not terrible, but for some reason the street has not looked at this stock with favor. Is this a valuation story that has gone wrong?
Yeah, it's a great company. The valuation story has gone wrong. The management, promoters of the company have done well. They have rewarded themselves in terms of offer for sale and excellent dividend before listing. Of course, there's nothing wrong. That's the way the promoters they get motivation, build a successful business and unlock value. The point I am saying that post-listing opportunities are limited because the listing coincides with downturn in the automobile sector sales. As I mentioned earlier, now the whole industry is going in single digit. In fact, a month back in one of the industry association meeting, it was officially quoted on all media that big players are expecting even 1 to 2% volume growth for passenger vehicle in FY26. So yes, unfortunately there is a possibility of further 5 to 10% correction in the Hyundai motor. Of course, the automobile sector is always cyclical. Once in 2-3 years it comes back, nicely. So till that time, one has to monitor. And anytime if you sense a reverse cycle, then one should rush to buy stock like Hyundai and Maruti. Otherwise, I would not buy the stock now.
Okay, so that's the view with regards to Hyundai Motors. Our next caller, Koteswar Rao, is calling in from Hyderabad. A very good morning to you. I believe you have a query on Suzlon Energy.
Yeah, correct. Good morning.
Good morning.
I bought Suzlon Energy 800 shares at 56.65.
Right.
With a long-term horizon of about 1 year to 2 years.
Right.
And my query is, if it is, should I add it or should I sell it if there is a dip?
Okay, and I believe you did not buy this long time ago. It's just bought recently.
No, actually, I was trading bit and off late I was selling and everything, but based on the order book values of the Suzlon Energies, then I bought it for a long-term perspective.
Got it. Okay. Got your query. I'll take this up with Mr. Chockalingam. Mr. Chockalingam, what's the view like for Suzlon Energy for the next 2 years?
No, it's of late has become more of tactical. Of course, I don't want to undermine the achievement the company has made in the last 2 years in terms of turnaround. I said tactical because if you look at the annualized EPS, the stock is extraordinarily stretched in valuation. So I would sell, but there is a risk by any chance since a lot of big players have entered the renewable energy space, if at all this company joins any consolidation process, then there could be a significant upside. But otherwise, standalone on its fundamental basis, it's a good sell now.
Suzlon is a good sell at 57. Man, that's not going to be something that a lot of people who have bought at slightly elevated levels are going to be happy to hear. Shriram is calling us from Puducherry. Hi Shriram, very good morning. How can we help you today?
Morning, Matthew. I'm a big fan of you. I'm holding 1,500 NHPC shares at an average price 103.
Okay.
So my query is, should I hold for a year or should I exit at current price?
Okay. All right. So, and you've been holding for a year, but how long did you intend to hold it for? Is it a long-term play that you have?
Yes, 3 to 5 years I can hold.
Okay. You bought at levels of 103, right?
Yes, average price.
Okay. You said you can what?
Hold for 3 to 5 years.
3 to 5 years. Okay. Since it's a fundamental question in the power space, would you prefer? And I know that Mr. Choklingam, you've talked about Coal India, so I would think that you're positive on thermal power as well going forward. But NHPC specifically?
If you look at the consolidated earnings for the last 4 years, it is in the range of 3.2 to 3.6 rupee EPS, almost stagnation. The second problem with a company like NHPC is that it is idle power based. There is a natural limit for quick expansion. Very difficult unless you get the right place in terms of geographies. You can't expand capacity. In many other power generation cases, if you have a lot of capex, if you have a lot of resources, you can expand to any level. So here there's a lot of limitation and profit also stagnating. And if you look at earning EPS P also, it's somewhere around 28, 29 P. So yes, hold in case it stock recovers another 5-10%. One can sell this stock.
Okay, so that's the view with regards to where NHPC is concerned. Our next query is on Mazagon Dock. Vijay wants to know whether the current levels are the right levels to enter the counter. Kush, do you think that the charts are attractive enough to enter into something like a Mazagon Dock right now?
I'd wait a bit. The reason for that is that the recent move has actually stretched the stock quite a bit on a daily chart. You are seeing some sort of a negative divergence play out. So I would wait. Also, what's happened is that the stock is now coming up to the all-time high resistance levels of 2,800, 2,900. So the upside and the risk-reward ratio from here doesn't really seem as favorable. I would prefer perhaps to get in closer to the 2,500 mark, 2,450 mark, with a stop loss near 23.25, and then you play for all-time high levels of 2,900. So perhaps at dip is when you should consider Mazagon Dock, especially if your view is anywhere from 6 to 12 months.
We got Prakash N, who's writing in from Bengaluru. He's ventured into Jio Financial Services. He's holding a very large quantity, 15,000 shares, at an average price of 322, as a result of which he's incurring a significant loss of as much as 13.8, nearly 14 lakhs. He's wondering what to do. He says that he can hold for a period of 5 years, and he's wondering whether to accumulate even at these levels. Mr. Choklingam, there are a lot of good prospects for this company. A lot's been said, but we've not seen anything very materially pan out. So what would you say?
Yeah, certainly. Even person like me gone wrong. We indicated at a bottom and we failed to successfully close the stock at peak because we were oversold by the futuristic, but that did not happen. But as you said, it is true, not done much. But there are two insights. One, the stock has crashed a lot. And second, in various verticals, the platforms are ready. In fact, in the last quarterly results, in the press meet, in the con call, they clearly mentioned that all verticals are now ready in the different segments of financial services. And I also believe in that. I think for next 1 to 3 years, the stock should definitely play out. And valuation also very attractive.
Okay, so continue to hold is a view from Mr. Choklingam. All right, it's time, gentlemen, to hit the rapid fire segment, and you know what this means. We'll throw as many questions at you over a period of 2 minutes. Do keep your answers as crisp as possible. Gautam from Mumbai wants to know about Bikaji Foods. Speaking of crisp, he's bought at levels of 837. He's wondering whether to hold or sell. Kush, on the charts?
Continue to hold, but keep a tight stop loss near the 640 mark.
Okay, Suman from Hyderabad wants to have a view on Cochin Shipyard. She's holding 56 shares at an average price of 1674. What's the long-term view like, Mr. Chocklingam?
1600 is a fair price. One should sell at 1600.
Okay, if you're holding Sun Pharma, I'm not very sure of the price, but Cornell wants to know about this. He's bought 430 shares. Should he hold or exit at this point? Based on what you're saying, Mr. Chocklingam, should he hold?
Sell now. Wait for more clarity from the US.
Okay.
All right. Subhash from Muscat, Oman is holding 500 shares of Nalco at 194 a piece, and he wants to know whether he should average at the current price, but his time horizon is 2 years. Is that the right strategy to adopt, Mr. Chocklingam?
Yes, one can buy Nalco at current price.
Okay, SIS Limited is the name of the counter. Deepika wants to know about this. She's bought at levels of 501. Stock is at 334. Would you hold, Kush?
It's an exit.
Okay, Senco Gold is the next counter. Divya is holding 200 shares, bought at 421 a piece. What should she do? Hold or sell? Kush, on the charts?
Senco Gold is an exit. Targets are 360 and 400. Stop loss for this one comes in at 275.
Okay, Ashwini Kumar is asking about IDFC First Bank. Mr. Chocklingam bought at levels of 53, significant quantity, 10,000 shares. Should he purchase more at the current price or hold for the long term?
I would prefer either Bank of Maharashtra, that's my first option, or Canara Bank to IDFC First Bank.
All right, fresh entries in BEL. Is this the right time? Ashish Pathak from Jodhpur is asking it. On the charts, Kush?
Yes, it is. Stop loss comes in at 270. It's a range play, and your targets are also very clear: 305 and 325.
Okay, all right. That brings us to the end of the rapid fire segment. I know there were 2 seconds, but impossible to get your view on anything in that time frame. Kush as well as Mr. Chocklingam, thank you so much as always for taking the time. Always a pleasure having you on the program.
Thank you.
All right, that brings us to the end of this action-packed Ask Profit edition from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. Up next is KYC, and this is NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
AB Real Estate might look to sell their paper business to ITC. So that would be an interesting deal, not too big for ITC, but from AB Real Estate's perspective currently.
On the 20th, he reported this in his segment Heard on the Street, which runs at 2:30 p.m. every day.
Hello and welcome. You're watching KYC, Know Your Company. Here it's a show which is designed to give the regular investor powerful, actionable insights into a single listed company daily. Now, today we're going to zoom in on PDS Limited. It's a very interesting play with regard to textiles. In terms of what the company does, well, it manufactures, it's into trading of garments and also designs and develops as well as helps in marketing of products and consumer products is broadly what it deals in, more so textiles and garments. The sourcing and distribution of ready-made garments is what the company does. It works with leading retailers. Let's probably put some names there as well, a Sainsbury, a Ted Baker. It also works with a Primark, a Walmart, a Tesco, a Kohl. So you have all of these global giants with which PDS works with. It manufactures products for these players and provides them with product. These are largely the products that they deal in, at least for the moment: menswear, women's wear, children's wear and essential wear. That's broadly the way they categorize their products. In terms of manufacturing facilities, they have 3. They have 2 in Bangladesh, 1 in Sri Lanka. The 2 facilities in Bangladesh are fairly large. In fact, nearly 80% of their facilities are based in Bangladesh. So sourcing largely happens from there. The clientele, of course, as I did mention, is spread across companies, but also across geographies. You have North America, Europe, UK, as well as Asia as key geographies that the company deals in. Even the split in terms of geography is more skewed towards a UK and a Europe than towards a North America. But nonetheless, given that tariffs is really the news of the day, we'll obviously want to understand what the impact of this is on the company as well, in terms of what the US tariff impact on the company is. That's the split with regard to geography. If you can see, nearly 72% coming from UK and Europe, just about 12, maybe 16% now skewed towards North America, 68% from UK, Europe, and thereafter the balance is around 15 to 16% coming from Asia at this point. So that's how the company is split up. So this 16% largely will get impacted basis the overnight news that we got. That's how it looks like in terms of the pie chart. A bulk of that coming from UK and Europe, right? Currently, the order book is quite high. It's at around $425 million dollars. So around $500,000 worth of order book, which it sits on at the end of 9 months FY25. So that's the sum and substance, frankly, of the company. Let's try and now break down the numbers and let's try and zoom into the metrics we'll be looking at. And in that sense, let's quickly pull the metrics up. We'll look at the income statement, balance sheet, cash flow, and the return ratios. And thereafter, we'll look at shareholding, street cred, valuation, as well as street coverage. It's interesting from a sense that it's a smaller company in relative terms, as we always do in KYC.